Today's video is sponsored by my Patreon. Check the link down below or go to StockSurfS.com/Patreon to join. You get all my buy, sells, call outs, morning update videos, more access to me throughout the day. Again, all that's on Patreon, link down below. Now, let's get into the video. Ladies and gentlemen, we have to break down how you and I can prepare for the next stock market crash. And no, before you dislike the video, well, I guess there is no dislike button anymore. Go figure, right, YouTube? Before you do that, and before you click off the video, listen, I'm not trying to say we're crashing tomorrow, the next week, 2, 3, 4, 5 years from now, 10 years from now. That's not what I'm saying. But what I am saying is whenever it does happen, you have to be prepared. And that's what we're going to break down today. So hit the like button, subscribe, make sure to get your 2 stocks from Webull and your $50 from M1 Finance, link down below. And now let's get into the video. So number one, the first thing you can do to prepare for the inevitable stock market crash, whenever the heck it does come, you can rotate slowly out of growth stocks into value plays. And value plays are stocks that typically are pretty cheap. They have low price to earnings ratios, low price to book sales, and they're typically cheaper than what the overall market trades for. So let's say, for example, S&P 500 has a P ratio of a 27. Let's say a stock has a 12 P ratio. That is in the discount category in layman's terms, right? There's more that goes into it. You do have to compare the stocks to other stocks in the same sector, industry. Yes, I understand that. But in layman's terms, let's say a stock is a 10P and the S&P's a 25P or whatever. That is a cheaper stock than the overall market. And in that case, that would be looked at as a value play. So typically when the markets are very hot, like now, we have a very high Shiller P ratio, a regular year trailing 12-month P ratio as well. Whenever the markets are hot and we know what the Fed's going to be doing, right? Tapering, they're doing that aggressively. Interest rate hikes are coming. When this happens, rotating out of growth stocks into the value place to kind of brace for cover, that's what people do. And that's kind of what I've been doing, but I still have a lot of growth stocks at the same time. But I've been buying some value plays recently, like Intel. We've been buying that one. Smith & Wesson, Activision Blizzard. Well, now I sold out of Activision Blizzard. It was kind of a quick little trade, but I'm probably going to get back into that one. And there's a couple of other ones, and I own other growth stocks as well. So I'm slowly, I'm not really rotating out of growth stocks per se, but I'm actually just adding more value to my portfolio. I'm buying some REITs now as well, which I have a video coming out on that very soon. So that's number one. Get out of the high risk plays slowly. Still have them if you want. It really depends on your risk tolerance, but slowly rotate out into the more value plays. And number two, you have to have cash to do pretty much anything that we're going to talk about today. And you'd be surprised. A lot of people have a lot of money invested. They have stocks, they have real estate properties, whatever, but they're really cash poor. And a lot of average Americans, pretty much all of them, according to statistics, right? Maybe not all of them, but a good chunk of them are cash poor. It's just the reality of what we live in right now. So let's say you have cash in your brokerage account and you have some other cash, whatever, for personal expenses. But let's say you have some cash in a brokerage account. You're in a good place because when stocks do crash, you're going to have dry powder, a war chest, in other words, that you can go in and buy some cheap stocks. So have cash. A lot of people just have a lot of money invested, but they don't realize cash is a position as well. It depends on your risk tolerance. Maybe you have 10%, 20%, 30% cash, maybe more, maybe less. It all depends on you. So have cash. That's tip number 2. Tip number 3 is sell some good old cash secured puts. So if you guys don't know what this is, it's the options market, right? You could buy options, you could buy calls and puts. And if you need to buy something, there has to be somebody that's selling you something, right? So if you're selling these cash secured puts, you're obviously selling to a buyer. And in other words, you're collecting premium for them taking on a lot of risk on gambling on the short-term price or the longer-term price of a stock. So for me personally, guys, when I'm writing cash secured puts, I write these on stocks that I want to buy at a lower price. And that's pretty much what everybody does. So let's pull an example up. Why not? Let me make my face smaller and let's pull up an example. So let's say I want to buy Apple stock, ticker symbol AAPL, not necessarily at $174, but I want to buy Apple stock at $150 per share. So what I can do is I can go to the options chain, and I can literally go and sell a $150 put on Apple, and I could pick whatever strike price I want, depending on, what premium I want to collect, when I'd want to buy it by, and so forth. And what you can do here is, guys, you do that, you sell a put at a certain price on a certain date, and if it gets assigned, in other words, if that expires in the money before expiration, so let's say Apple goes under 150, it goes to, let's say, 140 or something, 145. If it expires in the money, you are obligated to buy Apple at that price, but you have to have the cash to do so, hence why it's called a cash secured put. So in other words, I use cash secured puts to collect premium. That's great from the selling the option, but also to enter positions at a much lower price where I would buy the stock anyway and I'm just collecting premium. So that is a great way to kind of have just bets overall in the market when the markets are going down. So you can, you already know where you want to buy stocks, what price you want to buy them, and you might get assigned and you might have to buy them during the crash, which is good because you would have bought them anyway and you collected the premium, right? So that's number 3. Number 4 is have a watch list, multiple, of stocks you'd want to buy at cheaper prices. So what's the point of having cash? What's the point of writing cash secured puts if you don't know what stocks you want to be dealing with, right? So if you don't have a watch list, meaning a group of stocks you watch all the time, and then all of a sudden a crash happens, you're going to be scrambling. You're not going to know what to buy. But if you have a watch list, this is very simple, guys. If you have a list of stocks that you track and they go lower during a crash to prices where you want to buy them, you will be very happy to buy them and you'll bite quickly at the opportunity. And trust me, this has happened to me a lot, guys. A stock takes a huge dump and maybe I'm cash poor at the time or I don't strike in time because I didn't have it on my watch list or something, right? You can miss the entry point. You can literally miss the entry point if you're not really diligent about it. And you don't have to be if you're not that into it, but if you want to get it at a certain price, you got to do that. So you got to be prepared. You have to have a watch list of stocks so you can buy them when they get to the price you want. And you could just set limit orders. That works. I mean, you don't have to watch it every day, but you could set limit orders. You can do market orders, whatever. But just keep a watch list of stocks. And number 5, and this is big. This goes into mindset a little bit. Keep in mind crashes are temporary. And this kind of goes with the point that I just made. They're temporary, so that's why you have to strike quickly. And I think on average, the bear market, don't get me wrong, sometimes we see straight up crashes where in a month or two, couple months, it's all red. And that happens quick. I mean, in the grand scheme of things, a couple of months, a month crash like the COVID crash, it happens quick. It's a blink of an eye. Sometimes the crash is so fast, right? It goes down and it rebounds and this is like the COVID crash, and people are like, oh my gosh, I didn't buy enough at the bottom or near the bottom or when it was a lot lower, and they ended up just buying after the rebound. So if you have a plan, right, and you know these crashes are temporary, you have your watch list, you're going to be able to take advantage and kind of keep a positive mindset at the same time, contrary to what the herd is doing, right? When the stocks market's crashing, everybody's freaking out. They're running for the hills. They're selling. They're just abandoning their principles. It clouds their judgment, and they go crazy, right? But if you have just a clear mind, you know what you're doing, you know what you're in it for the long term, you stick to your principles, and you just don't panic at the end of the day during crashes. you're going to be in a good spot, especially, again, if you have cash, a good amount of cash, you did cash secured puts, you're going to do very well. And to quickly run through all 5 again, guys, just if you're writing down things, I don't know what you guys are doing, but just to quickly do it, number 1, rotate slowly out of growth stocks, not completely though, but just maybe buy a little bit more value, with low P stocks. That's a good idea. Have cash is number 2. Number 3 is write some cash secured puts. Number 4 is have a watch list. And number 5, keep in mind, crashes are temporary. Don't let these just make you go crazy, cloud your judgment, throw away your principles. Keep that in mind. So if you guys found value in this video, hit the like button, subscribe, drop me a comment, and join my Patreon. Join my Patreon. If you want all my buys, sells, call outs, morning update videos, more access to me throughout the day, literally everything I'm doing, every move I make, I post in real time on Patreon. That's linked down below. Or you guys can go to StockSurfest.com/Patreon. That's StockSurfest.com/Patreon. Make sure to also get your 2 stocks from Webull with any deposit. That's linked down below. And your $50 from M1 Finance with a $100 deposit. Guess what? That's also linked down below. And with that being said, guys, I'll catch you all in the next video. Thanks for watching. As always, keep crushing the market. Stay safe out there. Peace out.